Okay, thank you very much. Thanks everyone for attending today. Thanks for Traders Talk Live for inviting me to speak. And welcome to this educational presentation of how to catch tops and bottoms in all markets. Now, this plans to be a great webinar because I'm going to share with you a technique that I learned some 40 years ago on the floor of the Pacific Stock Exchange. You can start using this, applying it as early as this afternoon once we've completed today's presentation. But just let me start out by sharing with you what the market has done. We've all seen the market make new highs. This announcement came out last week. The Dow closes above 26,000 for the very first time ever. And a lot of people are having trouble trying to pick a top. They think, well, when is this market going to end? Or, today we've had some rather strong downward movement, but perhaps this is a good buying opportunity. Should we be purchasing here? Well, let me show you an example looking at this chart in LB. Now, this is the way most traders trade. Someone looking at this would say, well, we've made a good run up here. And the way I usually like to trade is I go to this chat room and they tell me I should be buying here. All the people in the chat room say because we've really hit some major support. So I'm going to buy right here, and you buy, and then look what happens. Okay, well, it goes down a little bit lower, and you say, well, you know what? Maybe I jumped the gun too soon. Maybe this is actual a point of buying. Look at all the bottom we're trying to make here. So you jump in once more, and then this happens. Okay, now you're at the end of your rope, but then you feel, you go to this webinar, or you see this person talking on TV, one of the stock or trading gurus, and says, all the institutions are buying here. In fact, this is major support right at this level, as you can see here. So this is where you should have been buying. So you're convinced, you know what, you'll triple down and buy here. So you buy once more, and look what happens. Does this look familiar to anyone? It looks familiar to me because when I first started trading some 41 years ago, this is the way I used to trade until I was taught by my mentors on the floor a great entry technique, which I'm going to be teaching you today. And had you been able to apply that and know that in advance of this, you would have potentially been able to capture 40 points in this particular market. So you're going to learn all the rules to this particular entry technique. Once again, this is an educational presentation. My name is Steven Primo. I'm the president and founder of Specialist Trading, and I teamed up about 8 years ago with Pro Trader Strategies, where all we do is educate our members around the world in over 110 countries and virtually every state in the United States, all the things I've accumulated in my trading career. Now, I started out trading some 41 years ago on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years, I was a specialist. Now, a specialist, if you're not familiar with what a specialist is, it doesn't mean that you're any more special than anyone else. It just means that if you wanted to buy or sell a particular equity or issue, you had to go to the trader who made markets or who specialized in that particular market. So I did that for 9 years. I traded during the crash of 1987 and the bull market that followed. I've traded straight up, straight down markets. I've traded just about every system, every technique you can think of. So I've seen everything under the sun. So in my 41 years, I know what works in terms of consistency, and I know what doesn't. So when I left the floor, I managed money in the 90s. I traded my own trading account. And once again, about 8 years ago, I teamed up with Pro Trader Strategies, where we formed this educational company where all we do is educate the things that I've seen that have stood the test of time, that have high levels of consistency. Because our goal is not to tell you how to trade, but to put the information in your hands so that you can be in charge of your own trading destiny. So I'm going to teach you this great entry technique today in just a few moments. But before we begin, please take a moment to view our disclaimer. We're required by law to show you this, so please take a moment to view it. I'm going to show you a lot of performance results, a lot of different charts, different time frames, different markets using this technique. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And please remember that all these examples are strictly for educational purposes only. So as you're taking a brief moment to view our disclaimer, I would also like to take this time to invite each and every one of you, if you haven't done so already, to follow us on Twitter. There's our handle right there. You may want to copy that down. Every day I post different information, from little bits of wisdom I've accumulated along the way to actual signals that our strategies have generated. So lots of free educational information. Feel free to follow us on Twitter. Now, as I stated earlier, we are a little bit different from other websites and companies in that our only goal is simply to provide you with education, with sound fundamental tools that have stood the test of time, and then put it in your hands, mentor you and educate you so that you can make your own trading decisions. You see, if there's one thing I've learned in my 41 years of trading, it's that no two traders should ever trade alike. But unfortunately, the entire business, the entire industry is based on that. based on come to my website, trade exactly what I trade, or come to my signal service, or trade my $10,000 system, and you'll get the same signals I get and trade exactly the same way I do. And to me, that's a recipe for disaster. No two traders should ever trade alike. You should maybe have the same basis or the same biases, but you should be able to make your own decisions. If you like to trade aggressively, you should be able to decide how you want to trade that aggressively. If you want to trade conservatively, you should decide, but you should never be copying or mimicking what someone else is doing. That's why we are strictly an educational company. And as you can see here, my goal is not to force feed you signals. My goal is not to tell you what the perfect method or the perfect time frame is. My goal is simply to educate you, to teach you how to trade with the same edge that turned my trading around when I was struggling some 40 years ago. And hopefully we'll be able to turn your trading around so that you can be trading not just a couple of years, but 10, 20, 30, possibly 40 years down the road. Now, what I'm excited about is that I'm going to show you all the slides, and everything I'm going to be sharing with you today is on something I just developed with Pro Trader Strategies. That's our new PTS Primo charting platform. This we feel is the premier trading educational platform you've been searching for. It has everything I've accumulated in 41 years, just one click away. So all the examples you're going to be seeing today, all the chart examples, are strictly generated off of our PTS Primo charting platform. Now, since this is an educational presentation, I welcome all of your questions, but if we happen to stop at every slide for a question, we may be here 5 hours, and I don't want to take anyone else's time. There's a lot of great education you're going to be receiving today. So I only have roughly about a half hour left. So if you kindly wait till the end of today's class to ask questions, I promise I'll get to each and every one of them, okay? So if you happen to join us late, please wait till the very end to ask questions. Okay, so let's first off start off how most people trade tops and bottoms, myself included. When I first started trading 41 years ago, this is the way I was taught, and this is the way most traders trade. And every once in a while, you'll have a good trade, and let me show you exactly how it works. First thing you want to do is pick some type of overbought, oversold tool, okay? Because when you're picking tops and bottoms, we've all been taught, if something is too high, you want to sell it. If something is too low, you want to buy it, right? That's the way trading goes. The way traditional wisdom tells us is to buy low, sell high. So I just have a very standard slow stochastic plot. And don't ask me about the inner workings or the settings here. I just clicked on slow stochastic out of the 90 indicators we have on the PTS Primo charts, okay? And there's the overbought threshold, which I believe is at 80, the standard, and here's the oversold, which is at 20. Now, conventional wisdom simply tells you that when something gets into the overbought area, when the lines ultimately cross lower, that's your sell indicator. And as you can see here in VRSN, well, that was telling us to sell right here, and it worked pretty well. You know, we had a nice sell-off right there. And then we got into the so-called oversold area, as you can see here, and when the lines crossed and started to move back up, well, that's telling you to cover your short if you went short, and then to go long. All right, so you go long, and it's working out pretty well. Now you're on the long side, and stock's going up, and now the lines cross again in the so-called overbought area. So now you're saying, okay, I'll sell my long and I'll go short. And you're thinking, boy, just a couple of more months of this and I'll be able to retire. This is just too easy, okay? So you sell, and then, well, it doesn't go down right away. In fact, it kind of goes sideways to up a little bit, but not enough to scare you. So you figure, well, we're still in the overbought area. Let me sell some more. So you sell some more. You double up, what we call is doubling up. And this time, it goes up even higher. Now you're starting to get a little worried, but you have a little cushion because you made money in the first 2 or 3 trades. So you say, okay, well, I'll do what's called tripling up. I'll sell again. The lines have crossed in the overbought area. And this time it should work. After all, I don't need it to go down a lot since I've tripled up on my short. Maybe I bought 3 puts, or maybe I've actually shorted the stock. But I don't need it to go down that much because I'm so heavily invested to the short side. So you sell short last time, and it doesn't go really up that much further, but it doesn't go down either, enough for you to get out or to make some money. So believe it or not, you try it one more time, you say, this is the time it's got to work, and look what happens, okay? This is the way most traders trade tops and bottoms, myself included. This is the way I used to trade. In fact, you know, when I first started, every once in a while, I would actually get a pretty good trade. In fact, it would work tremendously, like you saw here in the beginning, but it was usually that next trade where I gave everything back that I just made. So it was extremely frustrating. I know many of you are probably going through this. You're thinking, boy, I really studied. I'm doing everything right. I'm trading traditionally the way it's supposed to be. You know, when we get to overbought, I sell, oversold, I buy. And it works maybe 1 out of 10 times or 9 out of 10 times, but that 10th time, I give everything back. It just works miserably. So I was going through the same thing some 41 years ago, and I was lucky enough to have some mentors on the floor. These were specialists themselves who saw how much I was struggling and saw how much hard work I was putting in, but not getting any results. And this is what they taught me, and I'll never forget it. It was extremely difficult to grasp, but what they said, Steve, there is no such thing as overbought, oversold. Now, I know that goes against a lot of what you've been taught, probably what you're going to be taught today, and myself included. I was taught, no, something's overbought, it's too high or too low. But what my mentor said is, Steve, you have to get rid of that concept. There is no such thing as overbought, oversold. It's a myth. Haven't we all seen markets, whatever you're trading, intraday, commodities, futures, forex, go up as high as they want while the market is in a so-called overbought area? They just go up higher, weeks, months, years. And the same thing with oversold. Does anyone ever remember a stock called Enron? It went all the way to zero. It didn't exist anymore. And it was oversold for months, years. So it's silly to think you can stand in the way and think that you're going to pick exactly when something is too high or too low. Sure, it'll work every once in a while, and I know of a few good traders that I've traded with who are able to trade this way, but they're probably the 1 or 2% of all traders. 99% of us, myself included, have a very difficult time trading this way. And this is what my mentors taught me. They said, once you grasp this concept of there's no such thing as overbought, oversold, then you'll be able to trade with consistency. So at first, I didn't want to grasp it. I didn't believe it. I said, that's not true. I see stuff go up and make tops and make bottoms. But once again, I continued to trade my traditional way of trading, and I couldn't make any money. I was treading water, and it was very discouraging. So I said, okay, I grasp your concept. What is the right way to trade tops and bottoms? Okay, I'm giving in because for the next weeks or so, I couldn't make any money trading the way I was taught. And they said, Steve, it's really simple. The right way to trade tops and bottoms is simply to go with them. And I thought, go with them? What do you mean go with them? So this is the basis for the technique I'm going to be teaching you today. This is simply an entry technique, but it's based off of trading tops and bottoms and exploiting them, all right? Because why? Because we know there is no such thing as overbought, oversold. And once you really grasp that concept, you'll be able to become a consistent trader. And like I said, not just have a good year or a good couple of years, but potentially be able to trade like me, 30, 40, hopefully 50 years down the road. Okay, so let's look at the chart again, VRSN. All right, we have the slow stochastic plotted, all right? And remember, this technique does not have to rely on a slow stochastic. It can be anything. It could be another overbought, oversold tool. It can be something that you've created. It can be someone on TV that you hear telling you that this market is overbought or oversold. All we want to do is have someone or something tell us that a particular market you're watching is overbought or oversold, okay? That's all we're interested in. It does not have to be, don't feel as if it has to be the slow stochastic. I just plotted this here for visual aspects. All right, so here's what my mentors first taught me, okay? They said, Steve, all right, go ahead and plot whatever overbought, oversold tool you're interested in. But the first thing you have to do is find out what side of the market to be on. And the way we do that is by clicking on our buy-sell line here in our strategy tab. Now, you can do this on your own, but let me show you how simple it is on our new PTS charting platform. Once you click that on, you'll get a drop-down menu. And the buy-sell line is simply the 50-period moving average. And we have number of ways and easy ways in which to display it. Let's pick the easiest, which is the 50-period simple moving average. And so you plot that, all right? And I don't care what time frame, I don't care what market, I don't care if you trade commodities, I don't care if you trade 5-minute currency pairs, it makes no difference. You should have a 50-period moving average always plotted on your chart, okay? That should be the first thing. And then you ask yourself, where is price in relation to that 50-period moving average? Because if price is below, you're only going to be a seller. That's it. It's that simple. But if price is above, you'll only be a buyer, as we see right here. So you ask yourself, in VRSN, where is price in relation to that 50-period moving average? And it's simple. Obviously, price is above, right? So are we going to sell anything? No, we will never sell anything above the 50, and we will never buy anything below the 50. Right there, you increased your odds for consistency tremendously, okay? Okay, so now that we know we're going to be a buyer, now what do we want to do? Well, how do we pick tops and go with bottoms? How do we do this? Well, remember, we have grasped the concept that there's no such thing as overbought or oversold. We believe that now, okay? So we're going to exploit it. So what you want to do, whatever tool you're using, is to identify all of those traditional so-called overbought areas, okay? And I've circled them in green here. That's where we're in this so-called overbought area. And once you find out where they are, I want you to identify all of the short-term tops that were generated in those so-called overbought areas. A short-term top is just a little top that was formed, okay? And here they are, where we have these small green horizontal lines. These are where all the tops were created. Now, since we know that there's no such thing as overbought or oversold, we're going to exploit those tops. So when we see price exceed those tops by 1 or 2 ticks, well, we're simply going to buy. And had you taken the very first setup, which holds the most bang for your buck, you would have had 14 points potentially to ride to the upside. All right. And remember, this is just an entry technique. I know most of you are going to be saying, "God, Steve, this is great, but where do I exit? Where do I place my stop? Where do I move my stop up?" That's all in our courses. I can't give everything away for free. That's like coming into a restaurant and saying, "God, that free appetizer you gave me was delicious. Can I have a free entree too?" I can't do that. That wouldn't be fair to the customers who paid for the meal. And that wouldn't be fair to our members who pay for the full strategy. But I'm giving you probably the most important aspect, which is how to enter into these today, okay? So as you can see here, originally when we traded this, well, we had a couple of good trades and then we gave it all back by trying to short as the market kept going higher. But now we know that there's no such thing as overbought. So we're just going to exploit it. So every time we trade 1 or 2 ticks above, that's your setup to buy, to go long, all right? Let's look at this example in LB. Remember, we looked at this earlier. This is the first example I shared with you, all right? Someone looking at this would say, "Well, Steve, I mean, I was always taught to buy low. This has just been going lower. I mean, aren't we supposed to be buying it as it's going lower?" Well, what's our first rule? You go to the buy-sell line right here in the top left-hand corner, and you click on the 50-period moving average. Our first rule is ask yourself, once you've applied the 50-period moving average, you ask yourself, where is price in relation to the 50-period moving average? In fact, I'm going to say that again. That's so important. You should copy that down and put it on a Post-it and put it on your computer screen. Because even if you're not going to be trading this technique, whatever technique you're trading, ask yourself before you pull the trigger, where is price in relation to the 50-period? If price is above, then you'll be a buyer. But as we see here, price is below. So why would we in the world ever think we should be buying something when the market, not some guy in a chat room, not some guy on TV, but the market is telling you it wants to go lower? You see, at Specialist Trading and Pro Trader Strategies, we don't, have chat rooms or trading rooms because, once again, we don't feel you should be ever trading like someone else. We feel you should only be listening to one thing. That's the chart in front of you, the market. And what is it telling you? Well, here it's telling you that it wanted to go lower. So why should you fight it? Well, who are you to think that it's going to stop where you think it's going to stop? Our job as a trader is simple. Listen to the market we're trading and then jump on board. That's it. Our job is just twofold. Listen to the market and jump on board. So what's the market telling us? It's telling us it wants to go lower. Okay, great. So now we're going to jump on board by adding some structure. If price is below, then we know we're not going to buy. We're going to be selling. So that means we want to exploit traditional oversold areas. So that's the area where we are in the so-called oversold area. Since we know that it doesn't exist, there's no such thing as oversold. I mean, if this were oversold, starting right here, going back to January of last year, well, look how long we stayed oversold. I mean, it's silly to think that that has any consistency. So why not just exploit it, since so many people, that myself included, used to trade this way, are banging on this, are thinking that, well, this is going to really work. So what we're going to be doing is looking for all the short-term bottoms that were created in the so-called oversold area, which is right here, here, here. And if you take the first one, which we instruct our students has the most opportunity, well, you would have sold, could have bought puts or actually shorted the stock 1 tick below, and that was 40 points potentially to the downside. You see how trading can be really simple once you get out of your own way? Most traders overcomplicate their trading, looking at far too many tools, far too many indicators, and I'm saying this from firsthand experience. You should have seen my charts when I was a specialist on the floor. I had maybe 50 charts, 20, 30 indicators plotted on each and every one of them. I was looking at every news event. I mean, my mentor said, "Steve, why do you have so much noise in front of you? This is silly. You only have to look at a few things to find out what the market wants to do, and then just jump on board." And once again, I didn't accept it. I thought, no, this is the way I've always been taught, right? You're supposed to have all this information. The more information you have, the higher your statistics will and being for you, probability for you being a consistent trader. But if there's one thing I learned, it's the opposite. It's the simpler your trading technique is. It's the less things you have on your trading plate that will make you more of a consistent trader, not the more complicated. So most traders get in their own way by overcomplicating things. Look how simple this is. We're just exploiting what most people think is the proper way to trade. All right, so let's look at some more examples. We'll look at different time frames, different markets. Let's start out with ABC. As we can see, the market's been going higher. If you tried to sell this, you'd lose a lot of money. But this is what the stochastic is telling you. It's saying, but Steve, it's been overbought for months. Well, this is where we mean that there's no consistency in using this type of technique. So first thing we do is add the 50 period, and we see here that in November, we had consistent closes above. In fact, we had one close up above here where if we're more aggressive, we could have been able to apply this technique today. So we know that we're not going to be a buyer starting in November, okay? Now we just look at the overbought areas, and then we want to exploit all the tops that were created. There was one right here, here's one here, and even though we had a couple of bars closing below, you would have been entering above the 50. So this is a little bit more aggressive, but it's still an entry point. And if you just use this technique, well, that's 16 points coming into this last week in January that you could have exploited to the upside. To see how if you had used the traditional way of trading this, you would have been selling all the way up and lost a lot of money, because there is no such thing as overbought. How about HCN? Okay, someone looking at this would say, well, Steve, I bought here. We had a nice little bounce, but then it just kind of dissolved, and now I'm really losing money. I'm just holding on to this thing, hoping and praying that it goes back up, okay? But the trading room I went to, they really like this, and the guy who moderates the room says, you got to buy this stock. The earnings are going to be great. The institutions love it. And even the guys on TV said it's a great stock. Do you see how all those decisions I'm basing my entry are based on what someone or something else is telling me? But I'm not listening to the most important thing. What is the stock telling me? Well, once I apply the 50 period moving average, the stock is telling me it's going lower. In fact, it's screaming it's going lower since September. So you don't have to overcomplicate your trading by all these facts and figures and indicators and going to chat rooms and fundamental news. The market is really simple. It's just us who overcomplicate things. So the market told me months ago that it wanted to go lower. So since it's below the 50 period, am I going to buy this at all? Absolutely not. I don't care what some trading guru says. I don't care what some indicator says. I don't care what some guy in a webinar says. I'm not going to buy it until we have consecutive closes above the 50 period moving average. So for now, I'm just going to be a seller. If I use this technique, I want to identify all of the so-called oversold areas and then just locate where the bottoms were made, okay, where all these red horizontal lines are. And if I had taken the very first one, well, that would have been 10 points in my favor that I could potentially work with coming into this last week in January. Let's look at BA, Boeing, okay? Now, obviously, if you had tried to short this, you would have lost a lot of money. Why would you even think of doing it when it's above the 50 period? It's been above the 50 period for almost a year now. Why would anyone want to sell this? And why wouldn't you look with any strategy? It doesn't have to be this one, it could be anyone, just to be a buyer, because the market is telling you as long as it's above the 50, you should be only looking at this from a buying point of view. All right, so we're going to exploit the so-called overbought areas. And look at where it was overbought. Way back here in June of last year, okay? Why would you think this is overbought as it went higher? And now it's overbought again, overbought again, overbought again. Do you see how there's no consistency in using the overbought, oversold traditional wisdom? It may work every once in a while, but over time, it's like playing the slot machines. They're designed to give you a winner every once in a while. But over time, if you stay there long enough, you're not going to have anything to show for all your hard work of staying in front of the slots. You're really giving your money away. It's the same way with trying to trade overbought, oversold situations. So we're going to exploit them. We're going to identify all the short-term tops that were created right here, 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 and then simply buy one tick above. And guess what? Instead of losing a lot of money, you would have had 130 points to the upside coming into the end of January here. All right, let's look at a different market, the E-mini S&P for all you E-mini traders out there. All right, here's an hourly chart of the E-mini just last week or so. As we see here at this point, we were below the 50, but then coming into right here on the 11th or 10th, I should say, we started to cross above. So what does that mean? Even though we're just trading in an hourly time frame, that means we're only going to be a buyer. So we knew well in advance of this big rally that we weren't going to sell anything. We were going to be a buyer. So we look at the so-called overbought areas, and look at this. The entire time the E-mini was going up on an hourly time frame, this indicator was telling you, well, it's too high, it's overbought. Well, how long do you think you can stand this while it's going higher and higher? This is why there's no consistency in these methods. What you'd rather do is just simply locate and identify the short-term tops, and once we cross above, that's your point of entry. And on this hourly chart, in just a couple of days, that would have been 37 points that you could have potentially worked with, or roughly about a little over $1,800 per contract. Now that's an hourly chart. What if we want to look at a 10-minute chart? Okay, here's a 10-minute time frame, the same date around the 9th and 10th. At this point on a 10-minute time frame, we crossed below, so we knew that we're only going to be a seller. We're not in any way, shape, or form going to buy the E-mini. It's that easy, and you can do this right now. You don't have to purchase anything. You can just apply 50-period moving average, whatever time frame, whatever market you're looking at. So at this point, we knew we were a seller. So all we want to do now, if we're using this technique, is identify the so-called oversold areas and then look for the bottoms that were created, okay? And once we trade 1 or 2 ticks below, we can sell, and that would have been 12 points we could have worked with, or $600 to the downside per contract in 1 day, roughly. Now, lastly, we know we have some Forex traders out there, so let's look at currency pairs. Here's the Australian dollar on a daily time frame. Now, this was in December. We were below the 50, so anything we were doing with the Australian dollar should have been looked at from a seller's point of view. Now, just because we are below the 50 doesn't mean that you sell at the market. Remember, this buy-sell line is not a strategy. It's not a system. It's just telling you what side of the fence to be on. It's just telling you whether you should be a buyer or a seller. You still have to add some structure, and this is what I've given you today, the structure in the form of this entry technique. So once we crossed above, right here coming into mid-December, you know that you are no longer going to be viewing the Australian dollar as a selling market. You're going to be viewing it as something to buy. And look at right here in mid-December, we only had 3 or 4 crosses above, but we already started to look and see that we were in the so-called overbought. Now, once again, we went into the oversold area while we were below the 50, but this technique calls for you to sell once we trade below it. And since we never traded below it, we are now looking at it at a buy point of view. So look how long we have been overbought. Well, we continue to be overbought. And so had you sold the Australian dollar, once again, using the traditional wisdom, you've lost a lot of money. But if you use the technique I'm sharing with you today, where you had 1 entry point here and 1 entry point here just a few weeks ago, and that's 215 pips you would have been able to work with to the upside. Now that's a daily chart of the Australian dollar. Let's look at the same currency pair, but on a monthly time frame. Here's going back. This was a monthly time frame of the Australian dollar. Now, all the way back to 2011, we were above. So you would have been looking to buy the Australian dollar as a long-term investment up until May of 2013. Now we started to have consecutive closes. So at this point, we are a seller, okay? So all we want to do is wait for the so-called oversold areas to appear, as we have here, here, and here. Now, once you've done that, you identify where the bottoms were. You see, a bottom is simply where you kind of make a low and then bounce up, make another low, bounce up. But they have to be in the so-called oversold area, because this is where everyone thought, well, that's the bottom. And we know there's no such thing as oversold. It doesn't exist. It's a myth. So had you just sold in the very first setup there, you had potential of 2,000 pips to capture, $20,000 per contract, okay, per unit. See how simple this is? You don't have to listen to economic reports. I mean, you can if you want to, but there's no reason to, because the market was telling you it wanted to go lower. You don't have to have tons of indicators. You don't have to use any discretion. You just can decide how you want to trade this. Remember, if you want to use this technique, you have to grasp the concept. There is no such thing as overbought, oversold. It took me a while to grasp that concept. So I know exactly, if you've believed in this, I know what you're going through. I couldn't believe it either, because I had always read the books. I'd gone to the seminars. We didn't have webinars 41 years ago, but we had seminars. I read all the books, and everything said, no, you got to buy low, sell high. If something's too high, it's in the overbought area, you got to sell it. And something is too low, it's not valid, you've got to buy it. I've always been taught that. And then my mentors, who had been trading roughly about 40 years themselves, said, Steve, if this works so well, why aren't you making any money? And I said, well, the last trade I had a couple of weeks ago worked out pretty good. Yeah. And he said, well, what happened? Well, the next one didn't. I gave everything back. And that's the way this goes. Once again, it's like the slot machines. Every once in a while, this technique is designed to give you a winner and to give you this false sense of security. But over time, if you continue to use it, you won't have anything to show for it. Take it from someone who's been there. All right, 41 years ago, I was trading this way and I was struggling tremendously. So once I finally grasped that concept, I finally let go, that's when my trading started to turn around. I started to get rid of all these other tons of indicators. I stopped looking at news. Even though I was making markets in roughly 50 or 60 stocks, I stopped looking at the news. I said, you know what, the stock is telling me whether it wants to go up or down. Why do I need to know its earnings potential or the CEOs? It's telling me what it wants to do, so why not just follow that? And trading started to become a lot simpler, and the best thing is I started to become more and more consistent. So never ever try to pick tops and bottoms. That's the suggestion I have. I know other educators will tell you differently. That's fine. Everyone has their own way to trade. Remember, we're not here to tell you how to trade. We're just giving you all of our suggestions and educations that I have seen in 41 years that have stood the test of time. And if you're listening to what I have gone through, I will never ever try to pick a top and bottom again. That's what has sustained me going 41 years. Now, before we go into question and answer, I'd like to ask you a question, and ask yourself and answer honestly. Do you think this edge could have helped your trading this past year? All right. Even if this isn't your cup of tea, even if you can't let go of fundamental news or can't let go of going to a chat room or a trading room, ask yourself, how about the 50-period moving average, the buy-sell line? In fact, I dare you, go back and look at your last 10, 20 trades. Here's a homework assignment for you already. Since this is an educational presentation, I'm giving you homework. Go back and look at your last 10, 20 trades, maybe even just 5 or 10 trades. I can almost guarantee you that the reason why you lost money is because you were buying below the 50 period and selling above. Now, don't get me wrong. There are some traders who are able to do very well, but they're seeing something differently that the rest of us can't. The majority of us, myself included, have a very difficult time. So why not just make trading simple, okay? These other traders see something and it's easy for them. But even when they try to teach it, it's very hard for us to grasp because we don't see the markets that way. So make it simple. Make it as simple as possible. So just by applying that 50-period moving average, I really think you'll be able to increase your odds for consistency tremendously, regardless of what technique you use, what strategy, whether it's one of mine, something that you've put together, or someone else's. It makes no difference. I really think it will help your trading. Okay, so for all the attendees today, we have a great discount. Thanks for taking time out. Thanks for Traders Talk Live for inviting me to speak. We have a great promotion today. We're going to be offering you our PTS Primo charts. Remember, I just spent the last year developing this with my sister site, Pro Trader Strategies, and we really feel it is the premier trading educational platform. Why? Because it takes 41 years of experience of trading, from my days on the floor, my days of managing money, to my personal trading, and we put it all in one platform for you. Generate signals, everything's right there, all the different strategies, all the different tools, techniques, such as what I shared with you today, are all right there. It's the trading educational portal that you've been searching for. Now, we're going to be offering you a full-fledged strategy. This is not the strategy, this is not the method I shared with you today. This is a full-fledged strategy with all the entry rules, all the exit rules, stop placement, ways to trade it conservatively, ways to trade it aggressively. And we're going to be offering you that with a 30-day trial of the platform for only $7, okay? This is an amazing deal. This would cost you hundreds of dollars for only $7, okay? So after 30 days, you can decide whether you like it or not, but I really think you'll be convinced after 30 days that this is really what you've been waiting for. But we're not just stopping there with the platform and with the strategy. We're also going to be throwing in other things, because this is, what most traders have difficulty with. Remember, we talked about the 50-period moving average. Well, it has different features to it. So if you don't want to apply the 50-period moving average, you can use our different ways of applying the buy-sell line, which is our background feature. Now, what this does is automatically color the back of your screen, one click, and it colors the back of your screen either reddish orange or blue, a light blue, as you see here. So what is this telling you? Well, if you see the red background, we always say, well, red sky at morning, trader, take warning. That means you should not be buying there. That means price is below the 50 and you don't have to apply that. But if you see a bluish background, well, blue sky at night, higher prices in sight. So now, if you had waited for that news to come out and buy, or thinking that, well, that's going to tell me that this stock is okay. Well, if you applied our category of buy-sell line here, the background category, you would have known that you should have been a buyer somewhere back here, and you could have started looking to buy using any strategy, or even one of the strategies we're going to be giving you today. this is included as well. But we're not stopping there. We're also going to throw in many more ways to find out what the market's doing on a short-term basis, and we're also giving you our strategy. Okay, we're really proud of the strategy we put together. I have a pet peeve with different scanners, strategy scanners, because many times they're so difficult, and all I want to do is just pull up what the signals are for the next day. Let me show you how simple it is. Once you click on our strategy scanner, you will see a page like this being displayed. You'll simply click load symbols, and we provide you with different symbol lists, anywhere from top ETFs, currency pairs, futures, S&P 500, NASDAQ, or you can make up your own basket, and in a matter of seconds, those lists will appear, okay, as we see here. Now, whatever you're looking at, whatever strategy, whatever technique, you would simply hit scan, and in about 10 seconds, you'll see a list of either green or red bars. The green horizontal bars mean that that's a buy signal in that corresponding stock. The red simply mean that's a sell signal. And you'll have that at your access. It takes about 30 seconds to do this each and every night. And then all you have to do is simply click on the charts and the buy signals will automatically appear. So once again, this is the trading and educational portal we feel you've been searching for. 41 years of information accumulated and put into this platform. It's one click away. So remember, a 30-day trial. This is our discount for all the attendees today for only $7. That's it. And after 30 days, you can decide for yourself. There's no obligation. You're not locked in. You can decide whether you want to continue or whether that's fine and you're okay. And thanks for the information, okay? Now, to take advantage of this, simply go to Pro Trader Strategies. They're my sister site. They handle all of our discounts and all of our platform costs. You can email them at trading@protraderstrategies.com. Call them directly at area code 310-598-6677. Or the best thing to do is simply go to that link at the very bottom, click that on, and that will take you to the $7 sign-up page. Now, that's not a live link. That's something you have to copy and paste. So all you have to do is you can either copy that down, write it down, or drag your cursor over that, copy and paste that, and that will be on, and just put that on your browser. If you have any difficulty, just call up Pro Trader Strategies. There's no obligation, and just tell them that you were attending the Traders Talk Live webinars, and they'll hook you up with that $7 deal, okay? I see that on the chat box, they just posted the live link. Thank you so much for posting that. So if you want to go to the chat box or the GoToWebinar column on the far right, they've posted that. All you have to do is click that on, and that will take you automatically, okay? Thank you so much for doing that. Now, I'm going to leave this information up here. Once again, I hope you got something out of this, and I'm going to open up the question and answer box. Thanks for holding off on any questions. I'll try to get them for you. Let's see. Gene says, yes, but markets only trend about 20% of the time, so it is a good partial strategy. Yes, but I mean, remember, if a market is trending, and it's really starting to trend, you'll see whatever indicator you're using you'll see whatever issue you're trading go into the overbought or oversold, depending on how strong that trend is. So that's what you're looking for. The beauty of this strategy is if you're not trending, if a trend isn't in place, you will not be trading any setups because you will not go into that overbought oversold. So that's the beauty of this. You want to take advantage of these strong trending, because usually strong trending markets will continue, as you just saw. We usually, continue in an overbought scenario and continue to go higher and higher and higher. Just look at the Dow this past year, or we continue lower. Now, I wasn't able to get a chart together, but let's say you're intraday trading the E-mini today. Well, look at the strong down market we had this morning. Don't you think you could have used this technique if you're an intraday day trader, where you could have, in fact, go experiment with it. In fact, I'm glad you brought that up. This is one of the things I want to mention. Even though I gave you the rules for this entry technique, please, my suggestion and actually recommendation would be to first paper trade this, because you want to be able to understand the process. Most students implement it incorrectly. They jump in too quickly, and they said, oh gosh, I didn't properly identify a bottom or a top, or I didn't plot the 50-period moving average. I forgot. And so you have to do that first. So please paper trade this for a while before applying real funds, okay? People are saying this looks great. How much after the trial? Well, after the trial, I believe it goes to $97, okay? But remember, you're not locked in. This is just a $7 monthly trial, and then you can decide for yourself. This is not something where you're going to be charged after the end of the month, okay? Let's see. Ken says, do you have access to Canadian stocks with your chart? You know, I would contact Pro Trader Strategies. They're in charge of all the data and all of that, the platform and technical support. Since I don't trade any Canadian issues, I'm sorry I can't answer that, but I know there are different indices we do follow. So there are, you know, currency pairs, stocks, the NASDAQ, S&P, and we even have Bitcoin market as well. So there are a lot of different markets to trade, but I would ask them if they have Canadian stocks available for the data for that. And remember, there's no obligation. You can call them up with any questions you have. Let me see any more questions. Yeah, a lot of people are concerned with trendy markets. And remember, that's what you want to look for. When you have a market go into the overbought or oversold, that's pretty much a guarantee that you're in a trending market. We've all been taught that that's where trends end. And that will happen every once in a while. But it's been my experience, and the same thing my mentors taught me 41 years ago, that's usually the beginning of a trend. Go back and look at the charts you've had. Plot any overbought, oversold tool or anything you've devised or what someone says is overbought, oversold, and look how long it stays in that or continues to be overbought or continues to be oversold. This is a great way to stay in sync with these strong trends and to exploit what most people are doing, okay? Remember, it's been my experience. I know you'll hear other things from other traders, and those traders probably trade their methods extremely well because they are the 1 to 5% of traders who are able to do it. But that way of trading is very hard to teach to people. It was tried to be taught to me 41 years ago, and it was difficult. I couldn't understand it. This is so much more simpler, just to simply go with it than to try and pick a top and bottom, okay? Very simple, and I really think it will increase your odds for consistency. This is the backbone and the core of our philosophy. Remember, we are strictly an educational company. We're trying to educate you with things that have stood the test of time. I was taught this technique some 41 years ago, and I'm showing you examples from this past week how well it still works. So there is consistency in this, trust me. We have dozens of techniques that are similar to this, but entirely different, using different tools, sometimes only using a 50-period moving average based off patterns. Very simple to learn, very basic. It doesn't matter. We have hedge fund traders that use our strategies. We also have people that just started trading last week. So there's no rule to how much experience you have to be trading with us. We will teach anyone, and we're, you know, do a Google search on us. We have students all over the world and in every state in the United States. Okay. Amit asks, after 30 days, if we sign up for the basic level, does it provide the scanner? Yes, it does. The scanner will be included as well. And they've made some improvements on the scanner as well. I showed you the basic form. There's a higher level of, so once I think you sign up for the full version, you'll get even the better version of the scanner. And I just showed you how simple it is. It's even better what they've devised because we're always making improvements to it. But the strategies stay the same. The rules stay the same, okay? So I don't want to step on anyone more time. I think that's just about it. I really hope you got something out of this. Remember, we're an educational company. We're not telling you how to trade. We're simply trying to give you information and then mentor you so that you can make your own decisions. In my opinion, in 41 years, this is the only way one becomes a consistent trader. Not by mocking or mimicking what someone else is doing in a trading room, but by making your own trading decisions, okay? Thank you so much for listening today. Thanks for Traders Talk Live for giving me the opportunity to speak. I wish you all the most success in the world and best of luck trading, okay? Thanks a lot, and please take advantage of that $7 offer while it lasts. Bye-bye.